morning. It's 10 a.m. in Lagos, Nigeria. That means it's time for current and relevant business conversations. And you only have it here on Business Morning. I'm Ini John Mekwa. Well, let's get right into the business of the day. We begin with oil prices. It slipped on Tuesday after China cut benchmark lending rates less than some expected, showing further concerns over the oil demand outlook in the world's largest crude importer. Brent crude was down 5 cents at $76.04 a barrel. U.S. West Texas Intermediate crude for July was also down 99 cents from Friday's close of $70.79. The July contract expires at the end of trade on Tuesday. The more active WTI crude contracts for August delivery was down 71 cents from Friday at $71.22 a barrel. There was no settlement in the WTI contract on Monday because of a public holiday in the United States. China on Tuesday cut 2 benchmark lending rates, its 1-year loan prime rate and the 5-year prime rate, by 10 basis points each. The cuts, the first in 10 months, were less aggressive than forecast, with 50% of respondents to a Reuters poll anticipating a 15 basis point cut to the 5-year LPR. Well, the rate reductions follow recent economic data that show that China's retail and factory sectors are struggling to sustain the momentum seen earlier in the year. The Chinese government met last week to discuss measures to spur growth in the economy, and several major banks have cut their 2023 economic growth forecast for China amid concerns of its post-COVID recovery that is faltering. On Monday, 2 policymakers at the European Central Bank argued for more rate hikes amid risks of higher inflation. Markets also await testimony from the United States Federal Reserve Chair Jerome Powell later on this week for future rate clues. The wheat area now. Chicago wheat futures edged lower on Tuesday as traders locked in profits after a recent rally despite persistent supply concerns amid uncertainty over the future of Black Sea grain deal. Soybean and wheat futures were both headed for gains, and wheat futures lost 0.2% to $6.86 for half of a bushel after reaching a 2-month high in the previous session. The most active soybean contract on the Chicago Board of Trade was up 0.9% at $13.54 for half of a bushel, and corn gained 1.6% to $6.07 for a bushel. The CBOT was closed on Monday for that holiday in the United States. And Russia's deputy foreign minister said that even if a deal allowing shipments of Ukrainian grain via the Black Sea ends, Russia's agreement with the United States to ease its own export will stay in force. Back here in Nigeria, President Bola Tinubu has been receiving notes on his recent economic decisions, such as the foreign exchange rate unification and petrol subsidy removal. The latest is from the chairman of Bharti Airtel Worldwide, Mr. Suni Bharti Mittal. After the meeting, Mr. Mittal shared some points of his conversation with the president to include talks on international companies, on their plans for operations in Africa, as well as fighting poverty and lessons Nigeria could learn from India.
One of the biggest problems for foreign investors in this country for many, many years has been lack of easy available of foreign exchange. We as foreign investors who have spent billions of dollars here do not mind paying whatever the market rate is. The market must decide. But to be prevented from importing critical infrastructure equipment, paying invoices to our partners like IBM and other software agencies was making it extremely difficult for companies like Airtel, and I'm sure that must be the case with others as well. One of the key changes that His Excellency the President has made in the first few days of his tenure has been making Naira free float onto the market, letting the markets decide, as opposed to CBN's very convoluted structure of 4 or 5 exchange rates, which was very difficult to navigate for companies like ourselves and many, many others, MNCs. As you've all seen, the Naira has devalued, but the worldwide markets have given a standing ovation to this move. And the dollar bonds have strengthened here in Nigeria, and generally there is an excitement in the investing and companies who are going to be coming to put up their bases here in Nigeria. I also saw his president's deep commitment to removing poverty. I come from a country, India, where we also have had decades of poverty, which has been rapidly minimized and eradicated in some parts through intervention of massive infrastructure investment, massive digital ecosystem creation, and using digital infrastructure to provide services by the government to its citizens, be that direct benefit transfer in the form of cash in the hands of people, biometric-based banking transactions, biometric-based health services. During the COVID time, India, as you know, through the biometric could ensure that every citizen of the country was inoculated and vaccinated. And all these things that the technology can offer and more are now fully at display in India and available to its friendly countries in Africa like Nigeria. We discussed that part as well. I leave Abuja with great excitement, with clear commitment from our side that we will make significantly more investments here, roll out 5G in a very faster way, put more fiber into the ground, put more data centers, and importantly, support the flourishing technology startup ecosystem, which again India has done extremely well.
A lot of points there to get from Mr. Mittal, and we'll discuss some of those and a whole lot more with the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Irani, joins us virtually from Victoria Island. Mr. Irani, good morning, and thank you for your time this morning.
Good morning, Lily.
Yeah, it doesn't look like we can say enough about the floating exchange rates, which unification of rates, which the president announced, and now subsequently saw a statement from the CBN. And that's one of the things that the chairman of Bharti Airtel also talked about, and the impact it would have on businesses. And let's talk, from the commodities point of view, what changes can we expect following this change in policy?
I think first and foremost, let us understand something. Yesterday, for the first time in 15 years, the rate of exchange at the official market, the Naira was weaker at the official market than in the parallel market. In other words, the Naira closed at 770 Naira in the official market INE window, while it traded at 757 Naira in the parallel market. So it was even cheaper for you to buy dollars in the parallel market and sell it into the official market. The last time this happened was in 2008, many years ago, 15 years ago. So that tells you that the markets are working. Secondly, there's a big difference between convergence and unification. What you saw yesterday was unification. As a matter of fact, the Naira became much stronger in the parallel market, free market, than in the official market. So that's the first indication. Secondly, because there's a problem of supply, what happened the day before yesterday was to allow people to deposit money into their domiciliary accounts and take it out. So initial reaction was the Naira appreciated because there was supply. There was perception that there would be supply. But what has actually happened is that there is still a problem with oil revenues in Nigeria coming into the official kitty. And therefore, you will see that the market will begin to oscillate around a fee floating rate. And that does two things. One, it makes people realize that dollars are available. Two, that you can get it and it reduces the restrictions and the rationing for that matter. So at that point, we have a unified market, an efficient market, and it will begin to make commodities actually cheaper, and the commodities that have import content cheaper as time goes on. And what will happen is that the true commodity price, for example, the price of wheat has increased then you will see the price of wheat in Nigeria increase. The price of gas has reduced in Ukraine. You will see the price of gas in Nigeria begin to decline. So Nigeria will become part of the universal and global markets. And that is good for investors, and that is good for the markets. I think that is the reality.
All right, but I mean, you just said now about the parallel markets, the I&E window. That means these windows still exist. One would have thought that with, the effort and the pronouncement of unifying the rates, that everything will be merged into one.
No, there's no magic wand in markets. Even in Europe, the rate of exchange you have for your dollars at Heathrow Airport is different from the rate of exchange you get for your dollars when you get to Oxford Street and when you get to the bank. As long as the difference between one and the other is not beyond 2 or 3%, that's what we call the comfort zone. There's no problem. There's nothing like a unified, perfect market in the world. It's as close as possible to having an efficient market hypothesis. That is precisely what is happening, and you will continue to get there. And because commodity markets and money markets and foreign exchange markets are volatile, the rates will begin to change every minute. What was an efficient rate at 8 o'clock will not be an efficient rate at 2 minutes after 8 because the fundamentals have changed. So let us not start having a crisis of false expectation where we think that there's this perfect utopian world where there's one rate and everything, is exactly what it will be. There's no ideal market in this situation.
All right, and we'll see some of this also reflecting in commodities. For instance, that the new foreign exchange rate policy will result in higher cocoa production. How so?
Okay, let me explain that to you. Typically, what happens is that you buy a country's currency to buy its commodities. If the naira is cheaper, it means that the demand for Nigerian products, where we have a competitive advantage like cocoa, will be higher because, technically speaking, Nigerian cocoa will be cheaper than that of Ivory Coast, where there's a fixed exchange rate with the euro. So if I'm a trader, global trader, I would rather buy cocoa as long as the quality is all right from Nigeria. So what the Wall Street Journal was alluding to was that because the naira is going to be a free-floating rate and there are no restrictions for the use and repatriation of the currency, the Nigerian cocoa will become relatively cheaper and more efficiently priced than its neighbors. Don't forget that Nigeria has gone from number 3 cocoa-producing country in the world to number 5. Even Cameroon has overtaken us. What I see happening because of this price efficiency, I see that Nigeria's exports, especially cocoa, cashew, soybean, and others, are going to be much more attractive, and that is exactly what leads to diversification of an economy, rather than orders and all of that like we had in the past under the old dispensation.
Yeah, but I mean that can only be efficient and impactful if supply also increases. If farmers are still not returning to the farm, production has not increased, then we might as well have a good price but no products to sell.
No, that's not how it works. Every supply creates its own demand. How it works is that because there's a demand for Nigerian cocoa, the farmer will get a higher price in naira terms and will go back to the farmer. And that is only one source. You have your oil revenue, you have your LNG revenue, you have your soybean revenue, you have your exporters, you have your diaspora flows that come in, you have your musicians that are performing overseas and repatriating their money, you have footballers, you have doctors in Saudi Arabia. All of these flows, the invisible flows are coming to Nigeria. In some years are higher than what you get from trade flows. So as we go along and the market and the restrictions are removed, as you can see, all these Aboki effects and all that things, when those things which have now disappeared, you'll find that you are now beginning to get to a market just like every other market in the world. And the Nigerian naira will be as competitive as any other currency based on two things. One, the rates of interest in Nigeria, the rates of inflation, and the rates of productivity and growth in the country. That's what Bati Etta was talking about. That's what MTN is talking about. That's what Dangote is talking about. That's what everybody is talking about. Just remove the restrictions and let us actually begin to produce according to our God-given ability.
All right, Mr. Irani, thank you so much for giving us highlights on that, on the commodities and the impacts that this new policy will have on it. Thank you for your time this morning.
Thank you very much for having me.
All right, let's take a break now. When we come back, the president inaugurated the National Economic Council last week. What are we expecting from them? How do they help out with the new realities or the current realities in the country? We'll talk about that after the break here on Business Morning. Do stay with us. You're welcome back. Well, another strong and current economic conversation is the National Economic Council, inaugurated by President Bola Tinubu. This is not the first time a president is inaugurating an economic committee or council. But how much impact did we feel from the last one? Well, let's speak with Dr. Franklin Ingu. Dr. Franklin Ingu is the director of Lagos Business School Public Sector Initiative, among others. He's an economist, and he joins us virtually, I believe, from school, Lagos Business School. Thank you so much, Dr. Ingu, for your time this morning.
Good morning, and thanks for having me.
Yeah, so once again, we have an economic council. We had, towards the end of former President Muhammadu Buhari, but eventually, I don't know if, maybe you felt the impact. You guys are close to the powers. You know, how impactful are they being? And how do we make this not just a paper and signing, tape cutting event or meetings, that they normally have?
No, I think, first of all, is that the Nigerian Economic Council is supposed to be a very effective and functional committee. But of course, it's chaired by the vice president, and you have the 36 governors as members. And you also have, I think sometimes, NMPC and central bank governor as members as well. So ordinarily, it should be a very powerful team that normally guides, they're supposed to be guiding the president on economic issues, on economic affairs, and providing the right advice. And given that the 36 governors govern the states where they interact with Nigerians, where they get feedback from the local government, it's expected that they should be providing good advice, good information, good data that will be used to move Nigeria forward. But if we look at what happened during the PMB's regime, the only way to know if they did well is if supposing poverty rate went down, if supposing unemployment rate went down, if supposing inflation went down. But of course, almost all the socioeconomic indicators went south, during PMB's regime. That's why we have over 130-something million Nigerians in poverty. That's why unemployment is going up. That's why insecurity is going up. So it shows that maybe the Nigerian Economic Council did not really, they were not very effective in delivering the economic goals or expectations from Nigeria. So we believe now that with the new government and with the inauguration, and now we have a new governors, some of them re-elected, that this is the time for them to really come together. Proper coordination, proper synergy, to now help the government, federal government, and also themselves in states as well, to ensure that Nigerians really get the dividends of democracy in terms of how do they reduce unemployment, how do they reduce poverty, how do they reduce insecurity, and other social crises. So in addition to advising the federal government, it's expected that the governors should also collaborate more, maybe regionally. Maybe we can say it's governors from the Southwest, they say this is what we want to do. The governors from the Southeast, they will say this is what we want to do for the region. So at the end of the day, issues of, for example, I was looking at out-of-school children, and you find out that it's still very, very high. So these key indicators, we begin to see them coming down as the case may be.
Yeah, but I guess when you say the last economic think tank were not very effective, it would be interesting to know if it's from their side or from acceptance of their suggestions or advice. to the government, to the president, I guess that would be interesting. But we know that this set of economic think tanks that the president has put together, of course, led by the vice president, they have the first assignment of suggesting or giving options of ways to alleviate the negative impact of the removal of petrol subsidy. What kind of suggestions do you think they should be giving at this time?
No, I think just to answer the initial question, I think it can say that it can be both on the part of the federal government and on the part of the states as well. Remember that the governors are the chief executives of their states. They have budgets. They have the resources of the state under their control. So we also expect that even if the federal government did not take their advice or their suggestions, they also should, on their own level, in their states, really turn their different states into powerhouses, into economic prosperity, creating jobs in their state, industrializing their state, taking agriculture to a higher level. But that has not been done. A situation where you have, as I said before, 130-something million Nigerians classified as multidimensionally poor, it clearly shows that the governors have not really done well. But let's hope with this new set of governors that we have now, that they should do better. So with regards to what the president has asked them to do, I think, let me also mention that it's good that software subsidy has been removed. It's good that we now have a unified exchange rate. But I think that there's a need for deeper thinking about some of these policies. Even though it's popular, but it's very important that we rethink it properly. Because if you look at fuel subsidy, for instance, it seems asking the governors to come up with palliatives seems to be a bit reactive. It's supposed to be that this is APC government. They were in power for 8 years. It was announced that fuel subsidy will be removed since last year. So it's expected that some of these palliatives for the fuel subsidy removal, it will have been thought through. This is the time for implementation. This is not really the time to go back and start thinking through what should be done. But that, be that as it may be, we also have recommendations from different groups. So we have from National Salaries and Income and Wages Commission, who have said that the cost implications will not really be clear until about April 2024. We also have the Nigerian Council COVID-19 Action, which is saying that maybe we can learn from what we did and maybe use the World Bank $750 million for 20 million vulnerable and poor Nigerians. We have recommendation from Federal Ministry of Humanitarian Affairs. We also have recommendation from Nigerian National Automotive Design and Development Council, and also from major oil marketers of Nigeria. So we already have recommendations. So what is expected of this committee is then to sit down and look at this different recommendations thoroughly and say which one will work in the medium term, in the short term, in the medium term, and in the long term. That is across the different states. But it's also expected that each governor should look inwards and think inwards and say, in my state, based on what I have, based on the assets I have, how will I be able to cushion the impact of this on my state in terms of using the assets to generate more revenue, not really increasing taxes, but in terms of what do they do differently. I was also expecting that they should be able to say, while we are collaborating with the federal government, this is what we're going to do in our different states.
All right. Thank you so much, Dr. Franklin Ungu, Director of at Lagos Business School for Public Sector. Thank you for those suggestions. And we do know that there was that meeting again with government, and I think those talking about the palliative, and they did talk about segmenting it into this part you've talked about, the short term, the medium term, and the long term. But I mean, the implementation is actually what will really pay. Thank you so much for your time this morning.
Thank you for having me. Thank you.
All right, so next is talking about that unification of taxes. This has gotten a lot of employers, entrepreneurs excited because the issue of multiple taxation, has been on the front burner for a while. So President Bola Ahmed Tinubu has been advised to declare a state of emergency in revenue generation by merging the Federal Inland Revenue Service, the FIRS, the Nigerian Customs Service, and the Nigerian Maritime Administration, and Safety Agency, that's NIMASA, into the Nigerian Revenue Service. This would mean that paying taxes will have to be, to one source and one platform, and hopefully that should be able to deal with the challenge of multiple taxation. But we don't know if the president will take this advice, but let's see some of the implications from the eye of an expert. Talking about Mr. Michael Ango, is a partner tax advisory and regulatory services at Anderson. Mr. Ango, thank you for your time this morning. So what are some of the implications of merging this revenue collecting agencies? What are some of the, first implications of it?
Good morning, John. I think before we talk about implications, it's important that we first understand that this whole issue is basically an advisory. So after the elections, the president set up a policy advisory committee to look at different facets of the economy, infrastructure, national economy, oil and gas. So this whole talk about the merger of FIRS, NIMASA, and the Nigerian Customs Service is basically an advisory report that was issued by the Policy Advisory Committee. So it's not a policy of government, as it were. It may, of course, if adopted by the president or the administration, become a policy. But just to get that clear so that we are clear about what we're discussing. Now, in terms of the actual advice itself to merge the three entities, I think we can look at it from two perspectives. We can look at it from a theoretical and from a practical point of view. In theory, what we'll usually say on paper, it is, a good idea, as it were, because again, do not forget, we've had the Orosanye report now for over a decade that has talked about proliferation of agencies in Nigeria, and they need to merge them to improve efficiency, reduce bureaucracy, cut costs, and all of that. So at a theoretical level, it looks like a good idea to say, look, if you have agencies of government which are doing similar things, you have the Nigerian Customs Service, which collects custom duties, excise. You have the FIRS, which collects taxes, income taxes, VAT, and the rest. NIMASA is a bit, I would say it's an outlier because it's not really a revenue-generating agency per se. But if you look at the three of them, you may then say, okay, fine, there will be a need to kind of merge them to ensure that, in terms of revenue collection, efficiency, coordination, and synergy, we're able to achieve that. From a practical point of view, the recommendation has a lot of, there's a lot of work, or it needs to be properly articulated, it needs to be better understood. What do we really hope to achieve? Because if you look at these three agencies, let us take the smallest of them, which is NIMASA. NIMASA is essentially set up, or was set up, to provide maritime safety and security, shipping registration, merchant shipping, and all of that. So its major acts that it administers are the NIMASA Act, the Merchant Shipping Act, and the Cabotage Act. So if you look at its functions, it was not essentially a revenue-generating agency. It does collect revenue from its activities or from the services that it provides, but it's not a core revenue-generating agency. The FIRS and the customs are closer in that regard because the FIRS is a purely revenue-generating agency. It collects, administers accounts, enforces, and all of that. Taxes accruable to the federation and to the federal government. Customs, on the other hand, has dual functions. It is a revenue agency to the extent that it collects customs duties, excise, but it also has other ancillary functions which are as important as its revenue generating functions. So you know that customs is in charge of border control, they are anti-smuggling, even forex utilization. When you pass through the airport, they give you the forex form to fill. So if you look at them as individual agencies, they have very broad functions and they are very dispersed. The practical challenge is this. You have three well-defined agencies already existing for a number of years. How do you then begin to work towards merging them? You're going to have legal issues, you're going to have administrative issues, you're going to have technical issues. There are even international dimensions, as it were, because the NIMASA, for example, has international treaties which it has signed up for. It is a member of the International Maritime Organization and the ILO. Customs, on the other hand, is a member of the World Customs Organization and the World Trade Organization. FIRS also has a number of, obligations, international obligations with OECD, United Nations, and all of that. So I'm not saying that it's not something that can happen, but there needs to be more clarity. It needs to be defined. It needs to be properly articulated. And then, of course, you need to then do the hard work in terms of convincing the government itself that this is a good idea and that it should implement.
So, Mr. Ango, what then would you suggest? Because obviously this is just to make life easier for taxpayers, especially owners of businesses who have to pay to this and pay. What do you suggest, or how do you suggest that it can be more coordinated and easier, giving ease to the taxpayers?
Well, Ijoma, I'm not sure that the average Nigerian taxpayer, if you were to ask him to set out the agencies that he interacts with on a daily basis, I'm not sure he would name the NIMASA or the customs. Customs, yes, for importers and for excise traders, but I'm not sure that if multiple taxation is really the key issue here, then, merging these three agencies would be the silver bullet for resolving the issue of multiple taxation. But there's a point that I think I agree with, to the extent that we need to improve synergy and coordination. And I think one of the things that we've seen recently is in announcing the, advisors that the president announced, he did mention, or they did appoint a special advisor on revenue. So possibly such a role or such a person could be responsible for coordinating the revenue-generating activities of government at the federal level. And then you can drive things like coordination, like synergy, to ensure that, all of these agencies work together. They enhance they ease the payment of taxes, they reduce the bureaucracy and then the number of taxes that persons have to pay. But, these are also legal issues. If you are talking about reducing or streamlining taxes, then you have to look at what are the taxes that people pay, which of these taxes can be merged, or which of them can be dropped. And I think one of the major issues really is that at the federal level of government, I don't think we have too many taxes, as it were. But the issue is at the subnational level. When you begin to go to the states, that is where people then say, look, I'm paying 24 taxes, I'm paying 25 taxes. If you stop at the federal level of government, you will find out you're paying your income tax, you're paying VAT, maybe stamp duty, capital gains tax. The taxes are well defined. At the level of customs, you're paying excise. So I'm saying that if you are really looking for efficiency, I think you have to look more at the subnational level of government and see how the federal government can then work with the states to reduce the incidence of multiple taxation. But there are always, alternatives, or there are points. So one thing, for example, that you could do, and we have learning points from other countries where it has happened. Let me use the UK, for example, where we famously go to say, there's the Majesty's Revenue and Customs. When the merger took place in 2005, there was what I'll call just a lump, merger. But subsequently, they then took out the UK Border Authority out of the customs and left Her Majesty's Revenue and Customs with pure revenue generating functions. So excise, customs duties, and then all of the other taxes were left in Her Majesty's Revenue and Customs. So one thing we could do in Nigeria, for example, is to say, fine, we may then look at customs and say, remove excise from customs and domicile that within FIRS. Or you could say, even remove customs duties and excise and put that in the revenue service. And then you can leave customs as a purely law enforcement agency with border control, anti-smuggling, and all of that. But there's a lot of work to be done. It's not something that can happen, at the switch of a button or, at the snap of a thumb.
All right, Mr. Ango, obviously any good thing will require a lot of work. Thank you for your suggestion and your views on this advice. Obviously, it's an advice, and we noted that. Mr. Michael Ango, Partner, Tax Advisory and Regulatory Services with Anderson, thank you for your time.
Thank you very much. Have a nice day.
You too. Let's move to the markets now. Will Ebon comes in with a little bit of recovery from the equities yesterday.
Yes, good morning, Nini.
And good morning.
Yeah, we did see that recovery in the equities, though it was marginal, but we did look at the market breadth in terms of performance, so that more
we did see the value too
than losers. So yes, there's volume and there's value in the market. That means the momentum is probably still there.
Yeah.
So market will still be driving on an uptrend. Well, we see what happened yesterday was MTN was the one that tried to pull back that market.
Yeah, it tried, but it didn't succeed.
It didn't succeed. So, you know, MTN,
I'm sure if it was Airtel, it would have succeeded.
But let's say, so we saw the activities in the domestic equities market resume the week slightly positive as gains in Dangote Cement was up almost 1% yesterday, and GTCO offset the loss that we saw in MTN, which was down about 3.3%. Now the NGX ASI increased marginally by 0.02% to settle at 59,014 points. Market cap is still at 32 trillion naira. Now, month-to-date gains is about 5.8% now. See, year-to-date at 15.2. That's quite significant for the market. Now, total volume traded increased by 43.5% to settle at 892.97 million units, valued at 11.15 billion naira, and all transacted in 9,276 deals. This is less deals, not slightly less than what we had, about 1.5% down from the close of Friday. Now, sectoral performance was largely positive. It was positive across the banking, consumer goods, industrial, insurance sectors, while we saw oil and gas unchanged from its close on Friday. Now, on Jay's Bank, look at top trades for yesterday. We saw Jay's Bank up 139.89 million units of that stock traded yesterday. Sterling Bank followed pretty closely with 105.54 million units, while we had Universal Insurance at 95.11 million units. We see a positive market breadth, about 43 gainers to 22 losers. That still tells you that the market is still quite bullish. Now, we're going to talk to Abdul Rashid Momo if he shares his opinion. Good morning, Abdul Rashid. It's good to have you on the program.
Good morning.
Now, we see the market closing marginally up yesterday, but we do have that positive market breadth. Is this going to be sustained? Do we see an uptrend coming along? Do we see this, or are we going to see a volatility in the markets?
Okay, let me start from number one. Market is information driven. The first spike we experienced in the market was when President Ahmed Tinubu announced the fuel subsidy. That there was no more going to be subsidy, and some other things that was announced then, and we saw a spike in the market. The second one was the suspension of the CBN governor, which we saw the next spike in the market. So what we are seeing now is more of correction. The market is making correction now. What we are seeing more is that the big players are not actually moving the market. They are not within the top 10 gainers or losers, but we are seeing more of volume being traded within those stocks. As at last week, in terms of, I think the banks actually topped in terms of volume. I think UBA Access, those are the two major stocks in the banking sector that were actually accumulating. And when you see such accumulation within those trends, that means investors are still saying they are still comfortable with those shares. Why I say so is that even as we speak, the bid on Access, I'm not including GTCO and UBS, are still on the high side. So apparently, we are not going to see much spike, but more of correction. And let me explain correction to a lot of people. Correction is a natural process that occurs when prices adjust to more suitable level after an extended period of growth. It is characterized by pullbacks or decline in prices. So as market participants take profit or reassess their positions, corrections actually provide a healthy reset to the market, ensuring that prices align more closely with underlying fundamentals. So the market is still healthy. As at Friday, we had about 82 gainers. That's really huge. It's 2 gainers at the end of the week. I think about 26 losers or so, which we recorded. And as we speak now, the market is still range bound, looking good. These are kind of market traders like us want to trade, where we buy into weakness and sell into strength. There's always a small spread to make within this market. So all in all, the market is good for traders and investors at the same time.
Okay, so we'll look out for that correction in the way you've explained it and hope that it's not quite bearish for the market or for investors who are banking on making gains. Okay, so maybe in the near term, like after the Q2 results are out or half-year results are out, maybe we'll begin to see that correction. Is that right?
No, correction is when the market is range bound. Like as we are speaking now, the market is in a correction phase. Correction is from when the market pulls down, when the market comes down. So what we are seeing is the market is more of, it's mixed, it's stabilized. There's no much bull, there's no much bear.
Okay.
The only stocks that are actually making gainers and losers are more of the penny stocks. You can see them even from what I'm seeing now. I'm seeing stocks like Afro Media, Champs, Thomas Watt, Len Africa, Transat. You understand?
Yeah.
So those are the stocks actually gaining. But in terms of volume, for today, GT, UBA, BOA, MTN, and Dansem, they are the ones actually in terms of volume. But if you check out their prices, there's not much movement.
Okay.
So that is what I'm actually saying is the correction for now for the market.
Okay. So we're talking about the FX. You did mention that pronouncement by the president. Well, we begin to see any impact. And just summarize it. Do you see any impact of the Naira float in equities trading? If not now, maybe when do you think we'll start seeing that impact?
Yeah, that's why we still have so much optimism in the market. That's why the market is still bullish, because all in all, what we've seen so far we have expected these things to happen a long time ago, and Nigerians are beginning to, yes, it's biting hard in terms of the fuel, but in terms of policies made so far, I think that, because really the market is the barometer of any stock. I mean, the stock market is the barometer of any economy. So if we keep seeing good policies turning out from the government, then you can always see it in the way the market moves. If there's any fault to the market, will actually react to it. But for now, all we have been seeing is good. So the market is actually reacting to all the information being fed.
Thank you so much. Thank you so much, Abdulrasheed Momo, equity trader, TLW stockbrokers, for sharing those insights and for making audience understand what they ought to know about the market at the moment. Thank you so much. So we see the NASD market, the unlisted equities market, closing at 0.16%, towing the bullish line or the path that the NGX is going on at the moment. 741.90 points. Now we have 1.02 trillion naira as the market cap. Now, we talk about the volume traded yesterday, 2.21 million, 13.93 billion traded in value, and then 25 deals transacted yesterday. Looking at the fixed income space, we see quiet trading because of the outcome of the bond auction that held yesterday. It closed flat on that, and we're seeing on the fixed income space that the treasury bills market, a bearish trend, yields still going up in that space.
All right, Will, thank you so much for giving us that market insights. So now let's go to London, where Juliana is standing by to give us some interesting stories from there. Juliana, good morning. So we learned that the Department for Business and Trade's Minister for International Trade has announced the entry into force of the UK's developing country trading scheme. Sounds a bit complicated, but we have you there and we know you will help us break it down and tell us how it affects us.
That's right. Good morning, Innie. Can you believe Friday the 23rd of June will mark 7 years since the Brexit referendum vote? I'm sure anyone who voted in that referendum can't forget. It's still causing Britain so much trouble. And apart from all of the distractions that are taking place in Westminster concerning a very Brexit Prime Minister, shall we say, Boris Johnson, there is some good news that the UK government are announcing. And this was announced yesterday, as you quite rightly said. The Minister for International Trade, Nigel Huddleston, he's been in Ethiopia, unveiling a scheme that was launched last year, but legislation has just gone through this week, basically making a tariff-free trade between the developing world and Britain. So it's called the Post-Brexit Developing Countries Trading Scheme, or DCTS. It covers about 37 countries in Africa, about 67 countries in the global south, affecting about 3.3 billion people. And the whole purpose of this is basically trying to make Britain trade much more freer across the world. Of course, we are no longer a part of the EU. The EU was once our largest trading partner, and now Britain are trying to develop and forge these new relations. And there's no better place to do it than in Africa, of course, because we've got every single thing that they want. And they decided, the British government, to do this in Ethiopia yesterday because their existing trade agreement, I believe, is worth about £830 million. That's what the rate was last year. And of that £830 million of imports and exports, so this includes clothing, food, children's toys, 100% of those exports and imports were at zero tariffs, and they want to replicate that model all across the world. So it's absolutely great news. Nigel Huddleston was there yesterday kicking it off, and I think it just goes to show just how important Africa is to Britain, particularly as we are still trying to forge a new way forward after leaving the EU. And of course, we know that our economy is limping along at the moment. So the more friends we have in the world, the better. Yeah, and the more friends Africa can have within itself, the better. Talking of looking for free trade. Yeah. International free trade. But back in the UK, ministers are planning to block plans to ban new coal mines. But I guess the UK, they need this energy and other sources, alternative source for energy at this time. I'm sure the climate change activists will have some things to say about this. Well, I'm sure they will. They're possibly blocking traffic as we speak. But no, it's an important story because, of course, if you think about climate change and where we are in the world, lots of people point all of the fingers squarely at Britain for the blame, because this was the epicenter of the Industrial Revolution. At the height of the coal industry in the UK, it used to employ, I believe, about 2 million people. So you can imagine how much that was brought into the economy. But then, of course, we started wisening up and we realised that the biggest emitter to greenhouse gas emissions is burning coal, which is why over the past few decades, Britain have been trying its best to kind of phase out the use of coal. And then, of course, we hosted COP26 in Glasgow, and we announced that we would be a net zero economy by 2050. That was the plan of Boris Johnson's Conservative government. Then the pandemic hit, then the energy crisis hit because of the war in Ukraine, and they started to backtrack. They backtracked first by opening a new coal plant in December. That was met with lots of criticism, not just from the Green side of the House, but also from observers that were saying this is hypocrisy in action. Why are you saying that you want to be a leader of being a net zero economy and then you're opening up a new coal mine? Now, the Conservative government said they were doing it because it was going to contribute towards steel that would be exported outside of the UK and would create loads of jobs. So that happened in December, and now they are going back even further because this week a new amendment to the energy bill is going to be put in place where they are going to take out the line that says they are going to not be licensing any new deep coal plants. So yes, it is going to get lots of criticism. We've already heard from the outgoing Green Party MP, the only Green Party member of Parliament, Caroline Lucas, who says this is absolutely ridiculous and reckless. We're not thinking of the future of the planet, and it should be reversed. But it is likely to go through the House of Lords, as I say, because most people were against the original bill in the first place. Yeah, talking about necessity and common sense. Well, thank you so much, Juliana, for bringing us up today on that. We'll talk to you at 1:30. We'll speak with you at 1:30. Talk to you then. Thanks. All right, now let's go to the crypto space now with Laddie Williams. Laddie, you left your space open yesterday. Yeah. I have to get your pay for yesterday.
I know, yeah.
Because I covered really, for you.
You really covered for me, and but you didn't pump
I
the
want
market.
it in cash.
But yeah.
You don't pump the market.
Nobody does, actually.
Okay.
That market has a mind of its own. At this point, and we're seeing it's still, neutral.
Yeah.
You see 49
points.
It
was yesterday, too.
Yeah, still neutral, even though, there was time we're struggling with, greed and, got to fear, but now it's neutral. No direction, at this point. Let's look at the top cryptocurrencies we track. We see Bitcoin that's trading $26,868, up 1.56% this morning. Ethereum also inching up there, $1,700, 0.17% up. But we see on the other side, we see all these ones, XRP, Cardano, BNB, all down marginally, with BNB holding on $241 per coin there. Cardano, 25 cents, 0.93% down. That's what we're seeing. Let's bring in Gilbert Jopata now, financial market analyst. Hello, Gilbert. Great to have you.
Yeah, good morning, Mr. Laddie. So great to be here.
Yeah, great to have you, Gilbert. So with all we've seen, with Bitcoin, all the volatility, that we've seen in this market, American investor and the owner of, that's Cathie Wood, ARK Invest owner, she's predicting and forecasting that Bitcoin is still going to hit $1 million, at some point. And she's still quite bullish on Coinbase. Coinbase, that's their stock listed on traditional markets in the U.S. What is she seeing in this market with Bitcoin?
Okay, Cathie Wood, the CEO of ARK Invest, has been very vocal about Bitcoin. Her bullishness on Bitcoin is based on its limited supply, growing adoption by institutional investors, and potential to become a global reserve currency. And this her prediction of over $1 million has faced skepticism by some analysts who believe that it is too high. But I believe reaching $1 million in value is feasible, very feasible, considering adoption by institutional investors, rising inflation, and widespread adoption. Except for regulatory challenges and recession, these are the only things that could negate her price prediction. Otherwise, if you consider factors like the growing adoption by institutional investors, inflation, and widespread adoption as a form of payments, her market prediction is very feasible.
Yeah, and definitely to me, $1 million just seems quite impossible, by the way you see all this, action in the market. But let's look at Bitcoin dominance there. It did touch, 50%. What is this telling us?
Okay, Bitcoin just staged a staggering new height, making it the first time that Bitcoin has held more than half of the market shares in 2 years. Eating up 50% of the total market capital of the industry is more of a digestive market indicator of market activities like the Fed cutting down interest rates. Money moved from where it's treated less to where it's treated best. So it's typical that institutions shift interest from government bonds or alternative investment like Bitcoin and gold. We also have BlackRock, the world's largest asset manager, filing to launch a Bitcoin ETF. This is raising expectation that Bitcoin could soon be listed on major trading floor, which will even attract more institutional investors to the assets. And if you also consider the fact that another reason why Bitcoin dominance will have surged is also the recent SEC compliance crackdown on cryptocurrencies. This has made some investors move from other cryptocurrencies and flock to Bitcoin, which is considered in the marketplace as a safer haven. But whether Bitcoin will be able to maintain this dominance in the long term isn't clear. But what remains is that it is still very popular among investors.
All right, Gilbert, thank you so much. Always great having your perspective. Thank you, Gilbert.
Yeah, it's a pleasure. Thanks for having me.
All right, so Ini, I don't know about you, but it's an incredible forecast there from Cathie Wood. $1 million Bitcoin.
Seems your
don't
mind,
know how that's going to happen.
Your mind cannot fathom it.
Yeah, I can't wrap my head around it because it
don't worry.
When you see all the volatility in this market, but Bitcoin has
I remember when
surprised people.
Exactly.
Yeah.
So don't worry. Just think about it a lot, then your mind will get used to it and expand to accommodate it.
Incredible times.
All right, thank you so much, Laddie. With us, it's on the program today. Thank you so much for being a part of this 55 minutes of current and relevant business conversation. I do do believe and hope that it was worth your time. We'll do it again tomorrow. We'll have more relevant and more current issues bringing up to you. Will Ibong will be here at 1:30 p.m. with updates from the world of business. I'll see you at News at 10 for the stock market report. I'm Ini John Mekwa. Enjoy the rest of your day.